Hello, my name is Randy Wostratzky, Director of Business Development here at the Spectrem Group. Thanks for joining me as we review the output from our February Affluent and Millionaire Investor Confidence Indices, our monthly look at the attitudes and behaviors that shape the financial decisions made by wealthy households in the U.S. After posting a double-digit gain in January, the Spectrem Millionaire Investor Confidence Index suffered a double-digit loss in February, dropping 10 points to +1, just barely keeping the index in positive territory for only the second consecutive month. The Spectrem Affluent Investor Confidence Index, which measures the investment confidence and outlook of households with $500,000 or more in investable assets, dropped 3 points to -7. The 10th consecutive month the index has been in negative territory. The drops in both indexes are reflected in the Affluent Household Outlook, Spectrem Group's monthly survey of attitudes towards financial factors impacting their daily lives. News about the economy was mixed in February. The month began with news that for the first time in 3 years, the U.S. economy had contracted in the fourth quarter. The economy added 187,000 jobs, but the unemployment rate ticked upward to 7.9%. With the fiscal cliff deal reached at the beginning of the year, investors braced themselves as lawmakers grappled with the automatic spending cuts scheduled to take effect on March 1st. Additionally, on February 25th, the Dow Jones Industrial Average fell 216 points, or 1.6%, to close at 13,784, its biggest drop since November 7th of 2012. The markets were certainly rattled by the political turmoil in Italy, as some pundits have said that the elections there could result in a stalemate in the country's legislature. Financial markets in both Europe and the United States are worried about the prospect of Italy or even Spain being dragged into the region's government debt troubles, which have led to the bailouts of Greece, Ireland, and Portugal already. In positive domestic news, U.S. single-family home prices picked up in December, closing out 2012 with the biggest yearly gain in more than 6 years, as the housing market continues to get back on its feet. But once again, the big news, dominating the headlines, continues to be the talks in the Beltway regarding sequestration. $85 billion in sequestered budget cuts in defense and domestic spending are looming, and significant effects on government jobs and services could occur if the politicians can't agree to a deal. How negative of an impact could our economy be forced to deal with if these cuts come to fruition? Well, for starters, government and industry experts predict that sequestration could cost the economy at least 1 million government and private sector jobs in the coming year. And to save money, many employees, while still employed, will face undesired furlough days. Beyond the threat of a further decline in the workforce, lawmakers and government officials say that the furloughs would pose a major inconvenience and problems for many Americans. These include, about a 10% reduction in the FAA's 40,000-person workforce, a 25% decline in Coast Guard air and surface operations, an increase in waiting times at the nation's busiest airports by as much as 3 hours, elimination of Head Start programs for some 70,000 disadvantaged children, the shuttering of food plants that won't be able to operate without federal meat and poultry inspectors, a reduction in embassy security as the State Department will be forced to absorb a $168 million reduction in funding for that purpose, and finally, cutbacks in clerks and other personnel to process applications for Social Security and Medicare, or to process paper tax returns or field taxpayers' questions at the Internal Revenue Service.